the Dow had its strongest Santa Claus rally in 4 years, climbing 1.1% over the last 5 trading days of last year and the first 2 of this year, but not so much for the S&P 500. And crypto retreated yesterday after a positive start to the year, but it's still up a little over 4% year to date. And the U.S. seizure of Maduro has pushed geopolitical risks to the front of market focus in 2026, but crypto's biggest catalyst this year is still expected to be institutional adoption. More firms will launch crypto trading services this year, and digital assets could make it into more traditional investors' portfolios through 401ks and additional ETF launches. Well, joining me live here this morning is Josh Levine, chairman of OrangeBTC. Great to have you here, Josh. Happy New Year.
Thank you so much.
Well, 2026 has gotten off to quite a start. It's been very eventful, but when we think about the macro backdrop as we head into this year, what does it mean for alternative assets?
I think you hit something very important in the framing of that question. I think when you look at alternative assets, there's the macro backdrop and there's also what's developing, the innovation that's happening in the world. Let me hit the macro piece first, if that's okay. From a macro perspective, things are off to a fairly good start, as you pointed out, right? We've got positive growth expectations. We have a rate market that is largely reflective of an accommodative Fed, albeit with some concerns on the back end, which brings me to a third point that's actually kind of a positive, which is signs of a reflation trade. You've got a yield curve that's a little bit elevated in the back end. You've got metals prices that have obviously done well, and you're seeing action, of course, in cyclical stocks as well that reflect this overall reflation trade. So from a macro backdrop perspective, it's really accommodative to be what I think about as responsibly bullish right now for ownership of assets. That includes alternative assets, that includes traditional assets.
And while I have you here, I do want to get your take on crypto major Bitcoin. So when we look at the performance of Bitcoin at the end of last year compared to, say, equities or precious metals, we know that Bitcoin underperformed. But
Absolutely.
What do you expect heading into the new year?
To answer that properly, let's look at 2025 in context for a second. Bitcoin was down 6%, but there were many chapters in that year, right? You had the new administration come in with a very accommodative regulatory view with respect to crypto. That, of course, kicked things off into a nice rally. Then what happened, we had Liberation Day, and you saw crypto, you saw Bitcoin, you saw risk assets in general come down as the world kind of figured out what does this new regime mean. Once the world really kind of got its hands around how this is all going to play out, you saw big rallies, right, in risk assets, including in Bitcoin. And then what was that catalyst for that Q4 sell-off? It was the China announcement, right? And you saw Bitcoin at that point really correlate with deleveraging, with liquidity going backwards, and become essentially a traded macro asset as opposed to the speculative asset that you've seen throughout its previous 16 years ahead of time. So that's kind of the backdrop I thought was important to cover. Going into 2026, again, responsibly bullish is kind of where I'm sitting, and that's because if you look, a lot of that deleveraging happened, right, over the course of the year. I think we're looking at a much less levered Bitcoin owner. The second thing is that big adoption that we saw in ETFs, in brokerage, in bank accounts. I mean, ETFs alone grew to over $115, $120 billion last year. Morgan Stanley just filed for a new Bitcoin ETF yesterday. So the institutional use cases of Bitcoins are going to continue to grow. The last thing I'll point out is the regulatory framework. There continues to be a lot of work on Capitol Hill, and it's covering implementation of things like the Genius Act that have already gone through, long telegraphed piece of legislation such as the Clarity Act, and then a whole host of smaller topics. They're not small, but to more technical, let's call it, such as clearing up FASB rules for accounting and how that's going to help. All those things helps large banks, brokerage firms, etc., bring out new investment opportunities for investors. At that point, people's imaginations take over, these use cases go up, and to me, that's all fairly constructive for Bitcoin.
Yeah, and you mentioned an important point when it comes to Bitcoin, and that is utility as well as use cases. And with 2026 underway, we know that geopolitics is once again front and center, especially with what has happened with Venezuela. So when we think about emerging markets and particularly other economies, including Argentina, Venezuela, or say Turkey, when it comes to inflation, we're talking hyperinflation. So give us your take on Bitcoin and the role it plays in geopolitics.
Sure. I mean, when you bring up geopolitics, I think the one thing we can bank on this year, and it's going to play its way back in markets in a number of ways, and that's uncertainty. We just don't know the ramifications yet as to what happened in Venezuela, how it's going to play out, in considerations around Iran, China, Russia, Ukraine, et cetera, et cetera. And then you just put your finger right on the pulse of the most important thing. The volatility that brings in, and emerging markets are going to feel it first, right? And so those currencies are innately volatile. When it comes back to Bitcoin, it becomes a great diversifier, a preservation of wealth for citizens in those countries, also citizens in our own country, by the way. Now, I think a common misconception is what happens at that moment of something, you wake up and something bad has happened that you're unexpected. People are always surprised to see the asset didn't behave in that moment as the risk diversifier that they were expecting. And the reason for that is when you truly see a shock, COVID is probably the best, most recent example. When people truly don't know, the very first thing they do is they sell it all and they go to the US dollar as cash, right? And that includes any diversifier that they have in their portfolio, right? But over the long term, what happens is the chips settle, and those plays become strengthened over time. We've seen the dollar soften last year. We've seen those currencies soften over time. We've seen Bitcoin, blur your eye for a second, go from $1 to $10 to $92,000 as we sit here today with the chops along the way. That fundamental trend we think is in place because it's a great diversifier and a great conservation of people's wealth.
Yeah, and you mentioned 92K right now. We are looking at Bitcoin right below that level. But do you have a range for Bitcoin or price target?
God, I'd love to give you one. Let me give you other people's ranges as the coward's way out of that question, if you will. The bulk of what I've seen in terms of estimates end the year roughly at $150,000. The far end of those estimates actually comes from the most accurate Bitcoin forecaster in my book over time, which is Tom Lee over at Fund Strat. He's closer to $250,000. And then you have others that are saying, you could, on the chops along the way, come down towards $70,000, $75,000. I'm with the wisdom of the pack on this one. I think that bell curve around $150,000 makes a lot of sense. The institutional adoption via this ETF structure is really going to help it get there. I don't think it's going to be a smooth path. I think we're going to chop as we get there, but I do think we're fundamentally on that same long-term trend.
Well, Josh, we will have to leave it there for today, but thank you so much for joining me. I appreciate your time and all of your insights. Thank you.